seller, you need to pay attention to what's going on in this market. The stats are on your side. We begin to absorb the inventory. That starts to put pressure on the market. Is that going to be the tail here? We don't quite know. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This week I'm going to be looking at what happened for the week of June 5th to June 11th. We're going to get started, as we always do, with the luxury market. Then we're going to take a look at what happened in the Manhattan market and then the Brooklyn market. Then I'm going to wrap it all up and give you my thoughts for buyers and sellers. So right now we're going to get started with the luxury market. As always, if you have any questions at all, please post those below. Okay. There were 31 contracts signed last week for properties that were priced at $4 million and above. That is just one fewer than the previous week. Condos outsold co-ops 20-9. There was one condop and there was one townhouse in that grouping. The number one contract that was signed last week was 84E at 217 West 57th Street. This was a sponsor unit. It was asking a little over $34 million. So while the unit refers to the 84th floor, it is really the 54th floor. The building has 98 stories. Seems that the sponsor has inflated the number of floors for perhaps marketing purposes. We'd have to ask the sponsor directly to see if that is really the case. Anyway, this particular apartment has almost 12-foot ceilings. It has a little over 4,200 square feet. It includes 4 bedrooms, 4.5 bathrooms. It has sweeping views of Central Park from the living room, dining room, and eat-in kitchen. The unit is in Central Park Tower, a 1,550-foot tall skyscraper. It has 179 units. It started marketing in 2018 as the world's tallest residential building. It has over 50,000 square feet of amenities, indoor-outdoor pools, fitness center, children's playroom, a club room on the 100th floor, and ballroom, bar, dining facilities, and a cigar lounge. The number 2 contract was Penthouse A at 378 West End Avenue. It was asking $25 million. It is a triplex. It is a condo. It has almost 6,200 square feet. It includes 5 bedrooms, 5 bathrooms, and 2 powder rooms. The outdoor space totals a little over 1,300 square feet. It includes small terraces of the living room, library, and kitchen, plus 891 square foot rooftop terrace. The unit went into contract in June of 2021, but it didn't close and went back on the market in May of this year, sold within a month. This is a new 57-unit building, and it was designed by Cook Fox. It has over 11,000 square feet of amenities, including a doorman, a fitness center, a 75-foot saline lap pool, regulation squash court, half-court basketball court, children's playroom, music room, pet grooming facility. Wow, there we go with the pet grooming facilities again. That just always makes me laugh. Storage and garage. The sponsor, Alchemy, only has 7 units left, and including 2 that have contracts out. The average asking price on the remaining units, if you're curious and perhaps interested, is just under $3,100 a square foot. Okay, that is it for the number 1 and number 2 contracts. Now we're going to take a look at the stats for last week for the luxury market. The total weekly asking price sales volume is $268,274,000. The average asking price, $8,654,000. The median asking price, $6,220,000. And the average discount from original ask to last asking price, 6%. Average days on market, 628. Okay, that is it for the luxury market for last week. If you have any questions at all, please post those below. Always happy to answer your questions about the luxury market or actually any of the market reports that I bring to you each week. Okay, now we're going to move on to Manhattan. So, if we take a look at the 1 week look at the supply from Manhattan, we see that there were 347 properties that came on the market. That's down almost 12%. Contracts signed up 18%, 242. Nice pop there for last week. And the off market properties down almost 8%, 191 properties off market. If we take a look at the 1 month look, so we pull back a little bit, we see the supply is down over 25%, 1,603 properties, kind of, let's say, bit lackluster in Manhattan. Contracts signed up almost 11%, 1,109 contracts signed. Again, nice pop in the activity there. And the off-market properties, we saw that also popped a bit, but overall, we're seeing the off-market properties in retreat overall. But here with that 1 month look at the off market, 655 we see for the month, that was up a little over 37%. Market pulse, we see we continue to be in this healthy, neutral market, although we are seeing a kind of a decline in this inventory, likely having reached its peak for the season. Did see this increase in the liquidity pace chart. If you're looking at this 30-day moving window, we see the latest reading on that, 1,109. Really nice activity. We're definitely seeing the buyers are engaged, and we're seeing very brisk activity. So this market is holding even as we are into June. Interestingly, even as we are seeing the inventory ticking down a bit, we saw the demand pop up a bit. Market showing strength as we're heading into the summer. Good news for sellers on that front. New listings are kind of going sideways, more or less staying the same. And the contracts signed, we saw that volume pop to one of the highest levels of the year. Surprising, nice sign, show of strength in the contract activity. Again, sellers, pay attention to this. Really could be your moment. So make sure you're trying to get your deals done right now. If we take a look at this off-market chart, this is a sign of market strength. We are seeing that a number of listings that are being taken off the market has fallen swiftly. And this is a sign of confidence. Sellers feel that they are going to be able to get their deals done at a number they can live with. And we don't know where this is going, of course, but we have seen this in past markets where sellers feel this way. We begin to absorb the inventory. That starts to put pressure on the market. Is that going to be the tail here? We don't quite know, but definitely a sign of market strength when we start to see the off-market properties go down as we are seeing here. Let's just take a look now at this net new inventory. We saw how it spiked up for a period of time. We saw that in the spring market, but now look where we are. We're back down again. We have absorbed that inventory. It's a bit of what I was saying with the previous chart. We've not only absorbed that inventory, but now some of those off-market properties are being absorbed as well. So what are we going to see? Maybe a constrained market as inventory is being absorbed. Who knows? Let's see what happens. Okay, that is it for Manhattan. Lots to be thinking about here. Whether you're a buyer or a seller, you need to pay attention to what's going on in this market. And you can see from these charts that it doesn't matter which camp you're in, there's a lot going on, and don't be asleep at the wheel. All right, any questions, post them below. Let's move on now, see what happened last week in Brooklyn. Okay, let's start with that 1 week look at the supply. 181, down almost 19% in Brooklyn. Contract signed jumped 149, up almost 13%. Off-market properties down almost 6%. 80 properties came off the market. If we step back and take a 1 month look, we see that the supply is down a little over 19%. 880 properties came on the market over the month. 695 contracts were signed. That's down a little over 2%. And 15, almost 16% up for off-market properties. 255 properties came off the market. If we take a look at that market pulse, just as with Manhattan, we are in this balanced and neutral market. We're going to get into a little more detail, just as we did for Manhattan. If we take a look at the liquidity pace, this 30-day moving window, we see 695. Again, we are in this pretty strong contract activity, relatively speaking. Not a lot of inventory to speak of. Just as with Manhattan, we're going to take a closer look at the Brooklyn supply. The inventory in Brooklyn took a little step back. Hard to say, it's kind of going sideways. If we look at the demand pushed up by about 2%, the buyers, just as with Manhattan, remain active in Brooklyn. And if we look at the new listings in Brooklyn, we see ticked down a bit. They're back in line with February levels. And the number of contracts signed also ticked up. The Brooklyn buyers do remain active. Again, we're in June. This is great news for sellers. And we don't know how long that's going to last, but it's really nice to be seeing this kind of activity. So just as with Manhattan, we're looking at this off-market chart now. We see, just as with Manhattan, that the Brooklyn sellers are taking their off-market properties, putting them back on the market because they believe that they are going to get their prices. That is going to put pressure on the inventory, pressure on the market and on the buyers. Take a look at the Brooklyn new inventory. You'll see very much the same kind of scenario. We had a little pop, not as much as with Manhattan, but we knew that already if you've been following these reports. But now you can see we're really kind of flat in Brooklyn. So what does this all really mean here? Just starting, let's just back up. We're going to think about what we started with, the luxury market. We saw a pretty brisk luxury market week. Only one fewer contract was signed last week. 31 contracts signed for properties that were priced at $4 million and above. Again, we saw condos far outpacing co-ops. That seems to be the story these days overall. Buyers preferring condos to co-ops. We'll have to see if that continues. But for right now, that seems to be the case, at least in the luxury market. If we look at the Manhattan and Brooklyn markets, we see that the new supply is weak. Inventory is kind of flat overall, kind of down overall. The demand, at least last week, popped and is up. The off-market properties, that has declined, and so that is down. That is putting pressure on the market in terms of inventory, and if it continues, will put more pressure on the market in terms of demand. So for now, we are seeing a good market, healthy, neutral, balanced market in both Brooklyn and Manhattan. So here's the takeaway. Sellers, we are in June. I mean, we're doing really well. And sellers, pay attention. The market is holding on. So sell into strength and get your deal done. If you are not getting the deals that you want to be getting, if you're not getting the offers, you're not getting the showings, it is your price. So make your adjustments and get your deal done. This could continue on, possibly, but do you want to take that chance? I don't know. That's up to you. Right now, the market is great. You can see the data, the stats are on your side. But as they say, you just never know. Buyers, don't expect a lot more inventory to come on. You can see we've probably peaked out. There are properties out there. More sellers are probably taking their off-market properties, putting them back on the market. So keep an eye out there for things that might be of interest to you. Again, if you see something that has been sitting around for a while, you'll probably get a little more play. But now you can see you're probably having some competition that you didn't have before. The demand has risen. So you might have some negotiability. It really depends on how long a property has been on the market, and it really depends on the seller's circumstance. That is it for this week's look at the state of the New York City real estate market. As always, I want to thank Urban Digs and the Olshan Luxury Market Report for their amazing work. The work that they do helps me to help you to make great decisions. I will be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.